middle of the week or Wednesday. More importantly, it's the first day of the new month, first day of the new quarter. Second quarter is behind us. We're into quarter three. Chart on my left-hand side is the NASDAQ, the NASDAQ 100R system. Key news this morning is we've gone under 30,000. It was a strong start to the day, and we've been descending all through the Asian session, and two big hourly candles to the downside. And the cash market has also just opened into the black, I think, into the red. I think we were green yesterday. Strong close yesterday. NASDAQ was at 1.5% to close out the second quarter in the month. The Dow was up a quarter of 1%, and the S&P was back to within a smidge of 7,500 on the cash market, up 0.79%, up 59 points. 10-year yield, the key 10-year yield, back to 4.5%. The administration won't be liking that, but they will be liking these all-time highs in the stock markets, although the rollover is still, I would argue, still possibly in place as well here on these US markets. We'll see how we run through the third quarter. Significant news today is this big panel discussion that's ongoing. It's the reason I'm a wee bit late. I've got it running in background here on my Bloomberg YouTube channel. So if you've got YouTube, you can find Bloomberg there as well, and they're streaming this live from Portugal, from Sintra. So Madame Lagarde's talking at the moment. Warsh is there, head of the Central Bank of Canada's there, Mr. Macklin. Andrew Bailey's there from the Bank of England, and they're all talking about the same thing. They're talking about risk to inflation, a balanced approach, twin-prong approach. The panel moderator, she's doing very well trying to goad them into some sort of, they've just been talking about forward guidance. And Warsh in particular wasn't getting pulled on that, but she's I'll say she's questioning relatively straightforwardly and relatively easy to understand. Lagarde's latest comment here: risk to inflation growth more broadly balanced now. She opened the discussion earlier, but I'll say Warsh in particular. Kevin Warsh is his first visit outside of the United States as chair of the Fed. And he's been very complimentary about his hosts and his fellow central bankers here, and they're all being playing a close, guarded output. Weakish growth, inflation still too high in all these key economies. But we'll see how this concludes in the next half an hour or so. But anyway, as far as the markets are concerned, you can see. Let me just make myself a little bit smaller into the. Open. Let's check the audio's working. I had a bit of fun and games with the audios the last couple of days. Maybe I had a little loud street, but yeah, that seems quite okay. So this is the hourly chart on the NASDAQ. Let's just run through what we normally do on these open trades. So we had a high here at 30,275 this morning, and we're down. New low of the day just been hit on the cash open here at 29,000. We'll just run through the rest of the markets. The Dow 52,100, so we recovered 52,000, and again another one. We're just plummeting into 52,000 at the moment. This morning we were as high as 52,365 has been our high, so 365 point range on the Dow. But again, you can see on the hourly chart we're trending lower today, under the 20-day hour, under the 50-hour, the blue line, the orange line here, and the 200-hour is here. But still remains relatively well bid. We'll have a look at some potential trading options. Excuse me, I'm just about to sneeze. Excuse me. Quick sip of my one of the great Cypriot inventions, the frappe coffee. If you've never had a cold iced coffee, let me just make myself a bit bigger. If you've never had a cold iced coffee, in my humble opinion, you've never lived. I know a lot of people don't like cold coffee, but this has got too much milk in it for me. But thoroughly recommend it. Not just in the summertime either. It's a great thirst quencher. Anyway, where were we? We were talking about the Dow down, and I guess the S&P 4,460 here on our derivative chart. So as I say, we closed above right on 7,500 last night. The strong trend continues. It's the daily chart, but we have rolled over, haven't we? Yeah, and we've bounced from, as you were saying yesterday, we've bounced through the 50-day. We went under the 50-day, bounced through the 50-day, bounced through the 20 yesterday, strong start. But, I'd like to see a break and a breach away from this 7,500 as we go into the summer months. And here on the technical, using this strategy on the daily time frame, we haven't had a trade because we haven't. That is still short. That's still, well, the last trade was short on the out, but you've had to wait a long time on the outside, so it's still biased to the upside. But this strategy, mean reverting strategy, isn't playing out, so it's suggesting that the trend is still holding to the upside, given that we've been into the 50-day and bounced off it, been into the 50-day here and bounced off it, and rallied really strongly from the 200-day on the start of this last leg higher, and through the 50-day here again. First test, or only one test, and off we went. We were talking about potential divergence in some of the indicators, weren't we, here during the first part of May and the war, but the markets are now very, very much looking through the war as a done deal. Obviously, those meetings in Doha aren't happening, the Iranians, so that isn't happening. But bar a major flare-up in attacks between Israel, Lebanon, Israel and Lebanon, or Hezbollah in Lebanon, the Houthis getting involved, some strikes in the Red Sea or something. The opening up of the Strait of Hormuz seems to be going quicker than many had anticipated. So that's given a boost to this risk-on mood we've seen at the end of June. But again, the caveat being there, guys, it should just be a technical move for the wrapping up of the quarter and the month end. So, but we have had a very much a risk-on feel this week. As I say, a hawkish a hawkish caveat, but given that the yields are back at 4.5% on the 10-year, it may be only temporary, but we'll have a look at that as the month rolls on. So stocks down today, but up significantly Monday, Tuesday. So a positive week. If you're looking at a weekly basis, many are. I started my July account on Monday, so it's a new start to the month. It's a weekly one, but it's for them. I wrapped up my June account on Friday, as I was saying, many people do. But anyway, stocks bounced again this week, certainly in the US. If we look at the dollar on the Forex market, it's very, very bid to the upside. However, I've got a live trade here, which I took before I came to see you. We were short on the dollar yen on the I think it was a 15. I can't remember. It was a 15-minute time frame. I've got two positions. I didn't know I'd taken two positions. I'd only taken one position. See, there's two positions live there. Can you see that? You can't actually see that, can you? So if I pull that up, you'll be able to see. You can see it there. Yes, for some reason, I seem to have opened two positions. But anyway, they're both in the money. We were short on a signal I got on a big move down. Let's just go to the dollar yen. This is the daily time. We're still moving high, as you can see. We're in a smidge. I've even put 163 on here. We were talking about potential action from the Bank of Japan as we got through 62. That hasn't happened. We've continued to track high, and if you look at yesterday, the speculators are very much on board there. Just like we went through 161 with a big fat candle on the 18th of June, we went through 162 with a big fat up candle yesterday, the 30th of June, to roll out. Technicalities at the end of the quarter and the end of the month for Forex is a little less of a position given the nature of the market. Position close. That's also hit my first target down the shorter time frame. We've just come down to that. We had a target. So it's continued to decline, basically. So the key trigger was the 10-minute. There was a big old heave-ho on the 10-minute candle here at 2:20, just gone ahead of the US Open, and we've continued to decline. I can't remember where we got filled on this, but has it taken out? I don't know if I haven't got a target on. I don't know what that one was. Entry was 62.50. I must have been trying to put a stop loss on. Anyway, I don't know. I don't know. I'd bought again, but again, the risks of trading, guys, live. You know, I didn't know I'd taken a second position. The first one has hit its first target, but it was a big old heave ho candle. Clearly something was going on, and I was happy to jump in on and follow that down. Here, and if you look at the hourly candle, see, obviously the hourly candle still got 15 minutes to conclude, so you couldn't action that, but you could see the trend had been lower from this push to 162.80. Remember, it was 162. Sorry, let me just go back to what we were saying yesterday. Let me just go back to the daily time frame. But that was the level above the key number back in when we first acted in, when the Japan central bank first acted. So it was the 160.80 level, so 80% above the 160 level, or 80 cents above the 160 level, before the Bank of Japan acted, and that was where we got to this morning on that action. But as you can clearly see, that's just speculators cashing in, either for a start of the new month, taking positions. It's clearly not the central bank of Japan acting to buy yen and weaken it against the dollar, this very, very strong dollar. Dollar's very much on bid. However, it was a similar coincidence, and that's probably all it is, as we got to the 62.80 level. So the 80 cents level, line in the sand, or the 75 level, if you want to call it that. But that's the big hourly candle down. So it was really on the 10-minute chart that I entered earlier. I'm not talking to you about the 10-minute chart, but that's the one I entered on the breach of the 50 and into the 200. I can't remember where we set the target for that. Let's have a look. The target was exit price 162.37, so 162.38 was where my take profit was. 162.38. That was obviously on some. Was it 30 minutes? I thought it was a 10-minute time. 36 is there, so 38. So it must have been around this on perhaps the 5-minute time frame, was it? Not can't be in the 5-minute. Anyway, it's hit target and we're still live. It's still going down, so I'm going to actually put a stop loss on this. Let's just edit this open position as we continue to scroll down. So this is it's a mistake, but it's a happy mistake because we're in the money. So we got in at 162.50. We're at 162.36 at the moment. So I'm going to what's this? This is the 5-minute. Isn't it? Let's close this because we're in here. I'll close this as we watch. So the rules of the 5-minute would have been short there, stop loss up there. So this really ran really nicely down, and first target would have been there on that breach of the outer of the Bollinger Band. Then we would have kept another 50% on. 50% would have been closed there, because if you'd got in, you see the rules, that's would have taken you short there, but it's right on and it's under the Bollinger Band there on our 5-minute. Stop loss would have been up there. So we'd wait for the hit of the outside of so I might have even taken it off there as it's gone under the 200 period, because it's obviously nothing was happening, was it? But it's continued to low. So I'd have been, it's luck, basically, because we didn't know what news has caused this. It's something that they've said in Sintra, we don't know, but it's continuing to decline. So a touch of these, of the stochastics, the K and the D line will be enough to take us out of that final position, but we'll just monitor that and assume let's do it on the 5-minute time frame, because that's the one we use normally. So we'd have taken some at here, 50, we'd have left 50 on as it's gone down. I'd probably, and again, if I've been monitoring this, I'd have probably got out on that closed it out completely on that big candle. But 62.50 has been the re-entry, so we don't want to give much back. So we're going to have bring our stop loss down to let's put our let's just wait for the touch. There's the touch, so let's get out now at 360, so we can close that there. So we've had a first retrace. Doesn't mean it's over, but 5 minutes is 5 minutes. We're out, and we're now waiting for a potential long trade. So we need a clean break to this, see if this is going to go back up to perhaps, is that the low of the day, 162.30. See how it's got to 162.30. So anyway, so yeah, dollar's been, just to go back to the hourly time frame, dollar's been dominant this morning. As you can see, new high here, new 40-year low for dollar yen at 62.80, and obviously we've had a reaction at that. Dollar CAD even has come back down as well in the last hour or so, but again, yesterday we went to 142.50 zone and we had a reaction, but we've bought all of that back. So through the 20, 50 and 200 hour moving averages here on dollar yen, and then dollar CAD, and then moved back up correspondingly in weak move, in a sort of a wave movement, and then a sell of the dollar at the moment. Obviously, clearly to do with what Warsh is saying about they are going to get to their. We didn't actually says this, but we are committed to bringing inflation down. We've been over our target for 6 years. This is what he's saying in Sintra, and he's very much on it that we are going to bring it down at the moment. I don't know how delayed my feed is here now because I've been off it for a while, but stocks are low. Nasdaq's down nearly a whole 300 points, a whole 1%. Forward guidance, not right policy for current movement is what he's saying. Let me just update my feed so make sure it's still it's still, that is live. Yeah, so that's still the latest headline from Reuters. Forward guidance, not right policy for current movement. It's talking about the balance sheet at the moment, but let's see what this very interesting panel leads us with. Dollar index overall up today, even though the dollar's come off in this last hour as this discussion's gone on. So the euro back to 114 this morning. We were all the way down at 113.62. So the dollar's obviously clearly reacting to what Warsh and Co are saying. So that downtrend all morning has been breached, but very messy here on the hourly. We're back to 114. We've got the 200. We've got the daily trend line here on the euro to the upside, so we can recover that. We've got the daily as our strong uptrend from earlier in the week from these lows down here at the end towards on the 24th. It's 13.25. So we're right on that daily trend line. That's sort of back to recovery. Like to have that hold, that close out above this 50 or the 200, but very, very congested here. Lots of resistance around 114 to 114.10. So 10 pip ranges. There's the 200 hour, the 20 hour, and the 50 hour all compressed into that 10 pip range. So be careful trying to take this through here. You want a clean break above this, certainly this 50 here at 14.10 for this to move, potentially test another 20 pips to the upside. Today it was sold off quite quickly yesterday when we got there at 14.30, and similarly on Friday it went down from that level. So again, bit of hourly resistance through here, basically corresponding with the top of the Bollinger Band. On the euro on the hourly chart, 69.6907 for the Aussie. So the Aussie also been under pressure yesterday, 68.65. Back against the dollar and then up against the dollar again today, but well below .70, but we are holding over .69. I thought I had a 69 on here, but I haven't. Just bear with me a second when I put 69 on there, because it's clearly where we've been pivoting through for a while. 69. Text coordinates 69 0.69. There we are. So there's 69, which is where we've been pivoting through for a while now, haven't we, on the Aussie? But the Aussie relatively outperforming others against the very strong dollar. Swissy and Kiwi. Swissy again picking up as we got to 81.20 in the last hour, and the Kiwi 56.80, rising from this 56.50 pivot area we'd been churning through, but perhaps coming back to that as well. Nice compressed rejection of the 200, rejection of the 200 again, back over it. So we need to get to 57 for the Kiwi to find some buys again against the all dominant dollar as we start the new month. Gold, which we had a good trade. We had some good trade. We left you with a trade on this yesterday, didn't I? On our 5-minute strategy. See if we can go back to it. Let's reset the chart. We were short here yesterday. Oops, there we are. We were short here yesterday, didn't we? I entered again after I'd after I'd switched off, after I'd left you, and we continued to decline and hit. It was set up so it was not the north. The strategy is half of the profit is taken at the mid Bollinger Band, and then the full profit is taken at the other side of the Bollinger Band. And if it keeps going down, we only close 30 and leave 20% on, see if it goes down. We'd set our targets, I think, hadn't we, before we left? But anyway, but they hit target just shortly after we'd set it up, actually. We were closing round about there at 22.4. I think we switched off at 4 o'clock, didn't we, yesterday? Or just, yeah, there we are. That was we switched off just before, and we added another short, and then we got to target. So as you can see here, it's continued to decline yesterday, and it's recovering, interestingly, today, quite significant as the dollar's weakened in the last hour. You can see that that's the 5-minute chart for gold, literally putting on a new day high of the day as we've been live here with you. So because I put that on earlier, so on high of the day for gold today has taken us over 4,105. 4,107 is our high of the day, and our low of the day this morning was on open in the Asian session down there at 3,942. So quite a range for you gold traders. Quite a lot of positivity here on the 5-minute, rallying really strongly, consolidating through here at 4,025. That was our resistance this morning, and then the break as this hour's kicked off, as the great and the good of the central bankers have weakened the dollar in the last hour, lifting gold. See if it's done the same to Bitcoin in a minute, but we are moving higher. There is some significant data, actually, guys, as well, coming out in a couple of minutes. We got the manufacturing ISM numbers out of the United States, and obviously earlier we had private payrolls, which were weaker than expected, weaker inflation, tad weaker inflation in Europe as well, which is good news from Ms. Lagarde. But next key data, well, it's only a minute away now. So remember, these PMIs have been rising quite strongly but so has the inflation side of it, the prices. So 54 we got to last month. So it's been a strong 2026 for manufacturing in the US on the back of these data center build out in construction. So it's been a very, very strong ISMs. Remember, the other significance about PMIs is they are forward looking. So we are expecting the June number came in at 54, a little slight dip to 53.8 is expected. But let's have a look what this number looks like in a minute, given that we've had a weaker dollar and a weaker stock market as we've opened in the first 30 minutes, principally on Warsh's insistence of his hawkishness, basically, is still the market's interpretation of what was said. And they haven't really said anything at this panel to change that. There's talking around whether, but I'm barely saying it exactly now, can argue that policy has already been tightened because of actions outside of what they've done. But she's still bantering around. There's lots of great big smiles here. So she's obviously trying to push him again. He's not having any of it. So manufacturing PMIs, let's have a look what this number looks like. 53.8 is what the market's expecting and priced in. We might have had a move already on some markets if it's a big surprise. The other key thing is the prices. Are they? Is this going to be the spike or the top of the inflation numbers? 53.3. So that's quite a significant miss. Half of 1%. Doesn't sound a lot, but it's half of 1%. Prices have also cooled as well, perhaps more significantly. So there could be an equaling out of the reaction to that. So 53.3 for manufacturing PMIs Remember, it's very manufacturing in the US and lots of many developed economies in particular. As far as GDP, as far as the economy is concerned, the wider economy is concerned, it's not as significant as it used to be 2 or 3 generations ago. But it's still very symbolic. Countries like to have things made in their own country. That's the MAGA mantra, and it's a mantra of many countries, obviously. And the companies like Germany pride themselves on their motor vehicle exports. That's just Japan, and obviously all of that's been turned on its head with the arrival of the electric vehicles. But manufacturing, particularly symbolic in the United States, particularly symbolic with this president. So 53.3, it's been the worst. We just saw the graph, didn't we? It's been the weakest of the recent readings. Actually, it's not. Actually, I thought it was down here. It's not actually. So it's not too bad. It's okay. It's weaker, but it's significantly weaker than expected. Let me see if I can update that. See if it puts it on. And there it is. There it is. But you can see it's much stronger than it's been for many years, and that's one of Trump's mantras around that and around the stories of deregulation and trying to get these power to these data centers is going to be the big caveat as we move forward. So positive PMIs again, but weaker than expected. It's back to last month's levels. And prices come down quite significantly, so that's quite significant. So that the negativity of the positivity of that compared to the negativity of that miss is probably balanced each other out. But that's just my take. Let's see if the markets have reacted on that. Remember, don't be a predictor. Just see what the markets are telling you. The price is always correct. What you think doesn't matter. The price, if you think this price is going to go down, it doesn't matter. It's gone up. So gold here in the 5-minute actually spiked higher, interestingly. So we went back over 4,101 and we're back $12 now under 4,100. So it's been a dollar positive by the looks of things. Let's have a look in the Forex market. Let's go to the euro. Actually, it's got the yen because we were short the yen, weren't we? There we are. So the dollar has moved back to the upside here, and that's a cross. And here, given that the data's out, that's a buy. Okay, I'm going to buy this because it's following the rules. So this is a long here. Stop loss I'm going to put down here, 62.34, call it. Make sure we're going to put one on. 62, call it 35 for the 345. Let's split the difference. There we are. So we're long. There's the short. There's our stop loss. And let's see what happens based on that cross there. Given we pushed out here, I mean, it might not recover there. First target really should be all the way up there at 62.60. Given the strength of the sell-off, that's unlikely. So let's take some profit off, and we got at 62. If we get back to 62.50, but anyway, leave that one as it is. So yeah, dollars ticked up a bit on that ISM data, and the conclusion, I think they've stopped. Yeah, the panel was obviously for an hour, so they've started at 2 or just after 2, and they've concluded now. But it's really, very interesting. Dollar climbs as Warsh is in focus. That was beforehand, and dollar's gone up a tad, having weakened against the yen. So I see. Look at the euro. That could be particular. So the euro's also weakened, also across. So that's let's take a short on that one as well. Let's double up on, make that a bit higher. The other one was 5, wasn't it? Let's make it 6 so we can get out in 0.2. So we're going to sell the euro at this level based on that cross there, based on this 5-minute strategy. So we got in here. Our stop loss, I'm going to have it not right at the top of the turn. I'm going to have it around about just around the 200 period here on this 5-minute chart, so at 114.02, and see how it runs. So stop loss 114.02. Again, I'm not going to bore you with this running, but we'll leave that on and see how that transpires. Both of them out the money at the moment, but never mind. That's the nature of business. It should have got in there. Oh no. So it should have got in a bit earlier. We got filled here, so probably have a look at that as if it gets to 138.80. Why is that on there? Is that to the downside? So see where we go. Stocks remain, but not at the moment. Nasdaq is down 0.5%. The S&P is down 0.251% as we conclude the first 30 minutes of trading. Any questions, anybody, about that discussion or non-discussion? Chakra, hi, my friend. Would you like to look at a particular chart, my friend? Are you a trader? Do you trade short-term, long-term, scalper, swing trader? Let me know, and we can have a look at things. The only thing we haven't looked at whilst I've been here for the last 30 minutes is the old crypto and the oil market. So Bitcoin 59,300. So obviously still under that key. Whoops, a daisy, that was reverse. So it looks like our shorts are not going to play out. Crypto 59,300 this morning on the 5 minute. If you look at the hourly chart, still very weak. Up and down again into 58 and under 58 this morning. Interestingly, I didn't see that earlier, but that's a spike down there. So 58's been achieved this morning, rallied, but then came back. We didn't get as low as we have been, so there's a bit of a rising wedge forming there. Stopped at the 50-hour moving average, but a big old engulfing candle as obviously the dollar's weakened there at 2 o'clock. The 2 o'clock candle monster engulfing, so that's suggesting more strength to the upside. But is it enough to take us back to 60,000? That's what everybody's asking, isn't it? But you can see here 60,000, big old resistance. It's going to be the 200 day is coming under that shortly. The 20 crossed under the 50 here towards the end of June. Here on our 26. That was 26th of June. Sorry, yesterday. It's an hourly chart. You feel it's not the daily chart. So let's go back to up to the daily chart, and it really not affecting it. So there's 58, there's 60. Yesterday's sell-off has been bought a bit, but it's still an engulfing down candle. The buys is still very much to the downside, with support at 58 now. And as we said, the downside target from that last leg on the daily time frame remains around 54,200. So we'll see where that goes, but it's very much needs to break 60, and it needs to break 60,250 Bitcoin now for it to look anything like a potential buy. See the squeeze on the Bollinger Bands there as we've descended, retraced. There's the big sell there on the 23rd and moved down 3 consecutive candles to the downside, 3 black crows, consolidation, start of the next leg down potentially. So a break of 58 will add to more selling. And as we saw yesterday, the micro strategy, or strategies they're called now, the 1,000% bull for Bitcoin is starting to twitch and been selling off certainly a very small amount a couple of weeks ago of its holdings, but also liquidating some other holdings as well. So pressure continues. I mean, there could be a huge rally from here as well during the after the summer, but pressure trend remains to the downside for Bitcoin, and the chart has just dropped out for some reason. And we are on one's obviously been stopped out. Our trades. So let's have a look. We've had a losing trade. Go to end the trade. Then we have $5 we lost. We had 6.6. That was our euro short. Has been gobbled up by the stronger dollar again. It's reversed quite quickly. Dollar yen is still, but that's still out of the money. So let's just leave you with the oil markets. Brent at 71.70. Had a bit of a rally on Monday. Also, it's also been stopped out. So those shorts have. So we've had 2 losing trades. So 2 winning trades yesterday, 2 losing trades today at the end of the session. So hey ho, there we go. The trend remains to the downside. Down again today. WTI and Brent 71.60. WTI 69.20, under their pre-war levels now, quite significantly at the moment today. So heading to $70 as the news, as I said earlier, the movement of traffic and movement of ships of the anchored oil tankers has been more than many were expecting. So it's coming back perhaps more positively. And also chatter from OPEC this morning about increasing output as well. So it's weakening the oil price as we speak. Brent down and WTI 69.20 also down today under that key 70 handle on Brent. So some key levels. Still not down to the pre-war low for WTI, but we are for Brent. Obviously, WTI less affected than Brent on the war. So there we go. Rest of the day, as far as data is concerned, I think that's the main data releases today. We got more from, I don't think we got any more from Sintra. There's a Trump speech that's just popped up. Due to speak at the dedication of the Theodore Roosevelt Presidential Library in North Dakota. So he'll be blowing his own trumpet ahead of the July the 4th holiday, no doubt. Theodore Roosevelt, a good Republican. The Presidential Library in North Dakota, a good stronghold for Republicans in North Dakota. So obviously, I have lots of self-congratulatory comments to say later on. Tomorrow, I'm busy during the day tomorrow, unfortunately, so I won't be around with you for non-farm payroll, but I will do a review of the day. We'll do some trading into the close of the week, basically, the close of the US week tomorrow night. So job weekly claims as normal on a Thursday, but it's non-farm payroll tomorrow. 114,000 is expected. Earnings are expected to hold flat and unemployment remain unchanged at 4.3%. The ADP, the private payrolls this morning came in weaker than expected, quite significantly weaker. Down to under 100,000 again, psychological 100,000 it's under, and also 20% lower than it was than last month. So that's quite a slip from expectations for ADP payroll. They seem to be in a bit more. They're back to being a bit of more of a significant predictor of NFP, the ADP numbers. That's just I haven't done any numbers on that. It's just a gut feeling I've seen as the numbers have been coming through. I will do some research on that and let you know what I actually find. It might be just what I think has happened, and it's that quite often is really bad, doing something you think without any doing proper research. But as you can see, jobs, they are still hanging on at this low level. So we've got this stabilization of jobs market, few openings, but we saw them picking up a bit yesterday, but from the jolts. But the supply is also sort of has weakened. But we're in a sort of a bit of a balance area, a bit of a nice area for the jobs areas, but it's lower. Sorry, it's higher than many was talking about. Many were talking about, the balance being down potentially at, 60, 70,000. But we're back to the 100,000 level, certainly on the private payrolls. And non-farm payroll, the headline numbers, which everybody obviously talks about all the time, although continuing to decline again, is not freaking out the market, and we've come back in the last few months. So on the potential back of these data center build out and the sort of shedding of IT jobs, but jobs being taken back in hospitality potentially as we into the summer season. So see what tomorrow looks like. Okay, but I'll be with you for the close of the week for the US trades on Thursday. And on Friday, I'm not quite sure what we're doing on Friday. We're doing the London Open. We're going to trade the US close on Thursday night. We're going to trade the London and the DAX Open on Friday. So join me for those if you can. If you can't, watch the recording later. Is there any questions from anybody? Because I'm going to wrap this up now and leave you with the dominant dollar and the weakening oil market to the downside. That's WTI and Brent 71.70 under its pre-war level. Okay, take care. See you tomorrow. Be kind, be good. Enjoy the football tonight or this afternoon. In a few hours, it is indeed 3 o'clock. So it's less than 2 hours away now. England playing the Democratic Republic of Congo. So fingers crossed for all you England fans. Take care, all. See you tomorrow. All the best. Bye-bye.